was odd, almost oil managed to shake off the original hawkish tones coming from the central bank, as everyone interpreted as sort of vaguely dovish, but now we fall hard. What was the catalyst for you?
I think it's seeing just the effects that we're having on yields. For example, in Japan, seeing the effects on their yield curve as well. And then the more news we see, for example, as you were saying the earlier block about Tesla and layoffs and Ford having issues with their consumption, I think you're very quickly seeing the reverberation of higher rates across the economy. And, nowhere is it more clear than on housing starts, for example, because when we talk about busy summer driving season and the peak of demand for U.S. gasoline, we're really talking about home building season. That's the main driver of that spiking consumption. And we're seeing housing starts fall as mortgage rates get to 8-year highs. So all of that is starting to reverberate and will have an impact on consumption.
I'm curious about the balance then with that consumption with supply. I saw some interesting data here. Of course, it was out of that EIA report showing that production here in the United States has actually gotten back to that 12 million barrels a day mark. Of course, still well short of what we saw pre-pandemic, but still a significant milestone. And it does show that despite some of the commentary coming out of the White House, that producers here in the United States are trying to ramp up production, at least modestly.
Well, absolutely. I mean, it's in their best interest. I mean, they want to produce more at $110 WTI. There's just been a constraint, and a constraint because of the lack of sand, lack of labor, lack of steel tubing to go drill those wells. There's also some issues that a lot of the high-grade inventory that we had was drilled in the prior peak of oil. So now what we're drilling, and that's not everywhere, but in certain basins, for example, the Eagle Ford in West Texas or the Bakken in North Dakota, we consumed a lot of the top tier inventory in prior years. And now we're having to make do with less productive areas.
Fernando, big picture. It's interesting that you talk a lot about jet fuel, diesel, gasoline demand has lagged some of the seasonal norms. Why?
Well, I think one clear part is prices. That's taken a big hit on consumer spending. And when you look even on the retail side and broad retail, we've seen that there hasn't been a decrease in prices, but there's been in overall revenues, but there's been a decrease in volumes. And that shows up in the actual consumption of gasoline and diesel. So you're not having as many items shipped, so you don't have as much consumption on that side. And then, as I mentioned earlier, mortgages being as high as they are, fewer housing starts, more food inflation, so people are traveling less, and then the supply bottlenecks. Even the airlines and airports can't get people on flights. The labor shortfalls are so big that it's difficult to travel. Even you've seen some of the congestion around North America and Europe.
Excited to get on that plane tonight, I have to say. We'll see what it brings. Fernando, talk to us about, there were some writings by Bloomberg that maybe the White House is debating caps of exports of gasoline, of gas oil. Are you anticipating anything like that?
Well, I don't think that would solve the issue. The issue is more about the Jones Act and the fact that we can't bring gasoline and diesel from the Gulf Coast to the East Coast, where we're seeing a lot of the issues are on the coast because refining capacity is very small relative to demand. We shut down a lot of the refining capacity in the East Coast over the past couple of decades, and we import from Europe, and Europe is having their own issues with be it sourcing crude from Russia or rising electricity costs. If you waive the Jones Act, we export about 1.1 million barrels of diesel. That's more than enough to satisfy the East Coast. And we export somewhere between 600 and 800,000 barrels a day of gasoline. That's about what we import from Europe on the East Coast as well. So waiving the Jones Act, even temporarily, would help a lot more than banning exports. That would just lead to the Gulf Coast seeing much lower prices, but it doesn't fix anything in the East and West Coasts.